Market Technicals morning call video for Friday, April 19th. Another down day in the markets. Dow down 81, S&P down 10, NASDAQ down 36, gold up 29 on that oversold bounce. To be expected, gold had gotten crushed this week, so a recovery bounce, if you will, really was expected. Well, what do we have for today? I'm going to keep it light. Yesterday was very quiet. Even though we were down 81, we were kind of quiet. We held that key level in the SPDRs at 153.75. I'm going to show that to you in the charts. I have a few things that I'm going to run through. But most importantly, our sectors that we follow, our 5 key sectors, the Russell, the NASDAQ, the transports, the Dow, and the S&P, they all have broken their long-term uptrend line. Now that is going to be a critical role to play for next week. We'll see how that pans out, but it seems to me that the markets are in trouble. We are still in an uptrend. Okay, so we've really been chopping around all week, but when you get that volatility up at these levels, it seems to hint that there may be a tradable top in the near future, and I mean within like the next week or so. But we did have some volatility this week. We had a nice week. We did manage to be a little bit busier than usual. Actually, the busiest week we've been in the last 3 months, actually. So that was actually a real good thing. So we're looking at these key sectors as well as the banks. The banks and financials have also started to deteriorate, and that's not good, as well as the semiconductor index. Technology actually really sold off hard. Q's actually took a big dump lower, as well as Apple. Obviously, they're heavily weighted in Apple. We'll discuss that in the charts. I'm going to go right into it. All right, so we are oversold in the very, very near term. But however, and the reason why I bring up the NYMO is that we're still within this range. So this tells me that if the selling wants to continue, we can really, really escalate to the downside before we get really oversold like we did here back at the early part of November, which actually kicked off that rally. Okay, so there's plenty of room to the downside, guys, and I just wanted to make that clear, and or to the upside rather, if the market decides to, if buyers want to step in and buy this pullback. Okay, now let's take a look at the bar chart momentum index, which I have. I haven't showed this to you in probably several months because really there was not much going on. As you can see here, we really haven't got it. And I'm not going to waste anybody's time in the morning. So, but we did get that oversold reading, and we get that pop back up. So this, look, you can see what's happening. Oversold, bought, oversold, and then now we're back into the really this neutral territory here. Okay, which we are starting the day neutral going into today. Now the futures are up. The minis are up in the pre-market. Today's options expiration. Please do not get aggressively short unless you're shorting relative weakness, maybe an earnings call or something, because the markets tend to be bullish today. And if honestly, they usually are bullish pretty much all day. If the market even dips this morning, more than likely it will finish probably positive or flat. Now, we're up already on the day, so I think that gains will just be built upon today, unless, of course, something happens that's news-driven, geopolitical event during the course of the trading day, which I don't think that's going to happen. And with the markets being oversold right now, and the options expiration is today, I would favor a slight gain to the upside retracement today. So next week is different. Now, next week, usually what will happen is the markets will continue its trend for that week. So if the week is lower, we should continue to pick up lower following next week, starting next week actually. So just keep that in mind. Now, it doesn't have to be exactly Monday. It could be that we get a little follow-through up on Monday, and then the markets will continue to roll over again, Monday afternoon or Tuesday morning and into next week. That would be great for a good short. So that's what we're going to watch for next week. And that's my shorter-term perspective here, is that I'm looking for a pop today, maybe some follow-through on Monday, and then if the market starts to break lower again and start taking out these pivotal support areas, I'm going to look to start putting on some shorts, maybe buy some puts, maybe a bear call spread or something like that. But we'll discuss that as we get closer to that event. Okay, so I also been talking about copper. Copper put in a big reversal candle here, nice big hammer on a daily chart. But you cannot deny that copper is breaking down. Okay, now really it's irrelevant for for really the day traders. But it does actually work intraday if you're watching it, because if copper really starts to sell off, and then you have a couple of these key sectors sell off, whether you do have some intermarket divergence, where you may be able to get some sort of a rollover, or actually the opposite of what copper's doing. So keep that in mind. So now we have this. Now, it's logical for a back test. It's logical for copper to maybe test a 20-day moving average. But nonetheless, it's in trouble. And that's what's problematic here with this bullish trend that we've been having since November. Okay, so keep an eye on copper. Copper is going to play a critical role here. Also, the emerging markets, and I've mentioned emerging markets here. I think emerging markets are in trouble here. Now, we did put a black candle, signals a possible reversal. So, if anything, I think we get into this confluence area of resistance and then start to break down again. And if we take this area out, this 40.75, and which coincides nicely with this little cluster of support, this is going to be even more of reasoning to say that that I think that we have put some sort of a top in. Okay, everything. It's not just performance in the S&P. We want to see a lot of other things that make up why this market is rallying here. Okay, and this is not a good sign as well. Okay, now also we talked about China, FXI. Let's talk about the FXI China Fund, the ETF. You'll see here. Look at what's happening. Where China's breaking down. We had a bad GDP number that fueled a little bit of a sell-off early on Monday. But if you look at this, you see we got a black candle again. So even if we bounce and flag, all this would create is another bear flag, like here and here, here and here. So we've had numerous bear flags. That's all that it would be, and then we would look to break down lower. Now we are oversold again. You can see here, but we're starting to break back up again. So again. China is going to be probably one of the canary in the coal mines to really put a damper in this market. And again, a lot of people with this euphoria of stocks and buying stocks and putting money back in the market for the long-term investor, a lot of people just tend to shy away. Oh, it's China, don't worry about it. But you have to worry about it because they're a big driver. There are big purchases of our commodities, which really fuels a good speculation, like a risk-on type mentality. So really something to keep an eye on. Take a look at the dollar. We haven't had the dollar in a while, and I just want to show you where the dollar is from here. We have a bull flag in the dollar. So the dollar right now is quite bullish, okay? Even though we got out of the symmetrical triangle, rallied all of February, all of March, and sold off pretty much all of April. And now we're in this bull flag area. So a break back up and take this area out, then we can really start to accelerate as well. Again, putting pressure on commodities and stocks as well. Right now, that correlation has an inverse effect to what the equity markets with risk-off trade and risk-on trade is. So right now, that does happen. We were getting parity, so when markets were running higher and the dollar was also running higher as well, because that was fueling that euphoria of buying stocks. So people had to convert their foreign dollars into U.S. dollars, and that actually pushed the U.S. dollar higher as well. They do couple eventually, and that's what's probably happening in the near term as well. All right, so let's go into the charts, and here's the S&P cash. We have broke pivotal area of support, now resistance, and now we're sitting on 1530 here, and you can see how nicely these areas hold. And believe me, guys, draw the trend lines if you're trading. It does work. It does help. It gives you a good synopsis of where what things are to come and where we're looking to hold here. So this is a big area. 1530 is going to be a big area. A break below that, we're going to have a little thin zone, and we should flush down to the 1495, 1500 area rather quickly, maybe a week and a half. So keep an eye on this area here in the cash. Now, let's get to the spiders. Spiders here are holding nicely, that 153.69, 153.70. This is the area that was going to be a key area. I had 153.65. I changed to 153.75. It really come down, if you really dial it down, it's 153.75. Give or take 10 handles, really not going to matter. But I like try to be a little bit more precise. So 153.75 is going to be the main area. If we break this area lower, we do have gap support, which will come in at 153. So 153.75, 153 would be the area of support. Now, a break below that area would actually have us test this next pivotal support of 148.90, and I show that to you on a shorter term time frame. Now, here is a 60-minute chart of the spiders, and I have marked here why this is so important. 153.75, 153.65. 1, 2, 3, 4 touches. We have gap support area at 153. If this isn't going to hold, and everybody's watching this area, so usually when everybody watches, it usually doesn't. We usually get some sort of a break higher, and then unexpectedly we break lower. So watch this area, guys. This is going to be a big area. 150, 150 will be the next pivotal support area. So this is a big area, and I want to show you why. 4 touches. This has been holding true for the bulls. If it breaks it on a closing basis, I would say you're going to get a flush back to the 150, 150. Okay, now that's the 60-minute. Here is the 30-minute chart I have with the Bollinger Bands, Bollinger Bands, and of course the fib numbers. And I mentioned here the other day, we held nicely the 61.8% retracement. You could have taken a short here with a stop, 20 cents above the high of that candle. Now, we did roll. We are back down here in this line, and look what happened. We held. And if I bring this in, you can see here, we held again. All right, and this is the 30-minute chart now. You can see we are oversold in our short-term MACD and stochastic. So again, due for a bounce, absolutely. I do think that we would probably bounce today, given the fact that it is options expiration as well. That'll put a little bit, more of speculation that we are probably going to bounce today. All right, and this is just the 30-minute chart on another view, just to show you that we've held nicely here. And this is also a couple of spots, longer term support areas here, that if we do break lower and break the 150, 150, we'd probably test these areas here. These are some just I'm looking at for down the road, a little bit of a longer picture. Don't forget, we are coming into seasonal weakness now. All right, now here's the IWMs holding true to the 89.30. Okay, if we break here, we're probably going to test this gap area of support, which would be 86.09. By the time that happens, the 200-day would coincide probably in this area here. So that's going to probably test the 200-day moving average. All right, now that the IWMs can't rally, this is not actually a good thing as well. This is just telling me gauge of risk off on the trade. Here's the IYT. Really didn't do much here, kind of flagging, you can see here. So a break really on Monday's low, guys, is going to be a telltale sign that we are going to move lower. So watch Monday's low in the transports as well. Here's the XLF. Finally, and we broke this big bearish rising wedge on a closing basis. So today, if we pop back up again and test the lower end of this trend line of this wedge here, that's just going to give us a back test, which we want to see, and then fail. The next failure down after this pop up is really going to be your trigger on this bearish rising wedge, and that's what we're going to look for, and then we can start looking to short the weakest banks in that sector. And that's how I like to get my ideas, right? Look at the ETF, find out what's strong, what's weak, and get the best or the weakest stocks in that ETF that make up that ETF, and look to short it or buy it. Remember, we want to buy strong stocks and we want to short weak stocks. We don't want to be shorting into strength. We don't have enough time. Since you're day trading, you want to keep to that trend, or at least keep to that weakness of that individual stock. Okay? Now we have diamonds. Same thing here, guys. You can see the long-term uptrend line has been breached. It is now broken. Let's see if we get it back test and fail. Same thing with the other sectors. The song remains the same. Here's Apple. Apple, I told you, be careful. Apple is not to be accumulated. We are in the 390s. I've been saying that. We are in the 390s. Do we get lower? I think there's lower price to come. However, I did mention that we had a 400 pin. We not only did we get the 400, we actually exceeded it. Now, what happens today? There's a good shot that Apple can actually bounce 6, 7, 8 points to get into the 400 area and actually pin it to 400. It'll be exciting to see if Apple does close at 400 today. But nonetheless, if you know how to read the open interest on the in the option montage, you can get a good handle on where stocks are going to and likely be and close at the end of the week's expiration or the end of the month expiration. So that was a pretty good call. We got that a couple days ago. I know a lot of people ended up buying puts and putting on bear call spreads in Apple. So hats off to everybody who did it. I'm glad it was informative for everybody. Now, again, longer term picture, I think Apple was probably going to go 350 to 375, and then we would reevaluate now. Okay, don't forget, Apple got half of its stock value cut in half since last September. So now let's see where we go from here. But I do think I see 350, 370 in the cards in the near term future. Not today, obviously. It's not going to get there in a day or two. I do think it's going to probably retrace a little bit Today is Options X again, probably around a 400 area would probably close, and then we'll reevaluate. But I do see lower prices. Apple is just a day trading stock, nothing more right now to be accumulated. And of course, SMH. We do see holding this line again, this little neckline area. So we'll see if this actually starts to break low. But again, you see key sectors are in trouble here. And here are the Qs. Lastly, is the Qs, as you know, heavily weighted in Apple, so it took a hit as well because Apple, along with technology being weak as well. Okay, guys, that's really it. I want everybody to have a great weekend. Enjoy the day today. Don't put on a lot of stuff if you don't have to. It is Friday. You have about a good hour and a half. After the hour and a half is up, believe me, volatility dries up immensely. And just will get that slow grind higher into the close. And if you're losing money for the morning, you have a lesser shot of making the money back in the afternoon. Don't go home on a down note. Get ready for next week. Next week is going to be a big week for us. And let's keep our palates dry here, all right? Couple of good trades in the morning. Call it a day. Go play some golf. Have a great weekend. Enjoy the weekend. And we'll talk to you on Monday.